Good morning. Good afternoon. Good evening. Hello. Hello. Hello everyone in the world. This is Ono-chan from Hanwha, Singapore. Let me share the market information with you as of April 21st. As you may know very well, we are a Japanese integrated trading house, Hanwha Company, Ltd. Let us share today's topics.
Crude traders look for directions. We were surprised at OPEC Plus decision. Most of traders thought OPEC maintained the output reduction. However, they decided to increase output from May. USA demand data has supported crude price so far. Brent is $66.17 per barrel. WTI is $62.13 per barrel. April 21st, 12:45 Singapore local time base. A bit up compared with last week. The refinery's cracking margin. The crack of most of products have not changed much since last week. There is a rumor that China imposed an import tax against LCO. It might affect a lot in the future. Why Saudi decided to increase crude output suddenly? There is an interesting background. Do you remember that crude oil got to be negative last year April 20th? This sharp drop caused by sudden output increase by Saudi against OPEC policy. Donald Trump got angry against Saudi at that time, because US thought many shale gas companies would bankrupt because of low crude oil price. So, he suggested to Saudi that US Army would retreat from Saudi if Saudi doesn't cut the output. We need to look the background of USA and Saudi. USA needs to stop gasoline price up so that the economy policy made by the President Biden cannot be ruined. Saudi needs US Army support so that they can maintain power against Yemen. MOPS has got up around $20 per metric ton since last week. Today's afternoon session was around $14 per metric ton down. You can guess today's market from that movement. Maybe a lot down from yesterday.
Asian market is very fluctuated. China ports are the cheapest in Asia now. Countries lost demand got to be keen, so Korea and Japan also cheap. Surprisingly, Singapore is the second highest now.
Market information. This is Taninaka. Let's start from first Russian market. The availability of Nakodaka port is getting eased. The demand of heating oil got down, so some oil can be used for bunker market.
Next, China market. We can see ample availability in most of ports. Zhoushan Port, Shanghai ports and Qingdao Port are really keen to sell. Their tanks are almost full. The price of some ports are the cheapest in Asia now. Let's go to Hong Kong market. The demand remains weak still due to the 14 days quarantine against COVID-19. They basically import oil from Singapore. It is difficult for them to compete with other ports if crude doesn't go up.
Let me explain about Korean ports. Korean avail is very ample. The seasonal maintenance is finished. They would sell more volume in May.
This is Kubaya. Japanese port situation. Actually, one refinery has trouble in some units. They don't sell any volume from those units in April. The other refinery are keen to sell, though. Japan has long holidays called Golden Week starting from April 29th to May 5th. Each refineries have order due for the Golden Week. Please be careful for your requirement. Most of refineries cut the order on 26 April for early May delivery.
Singapore market. Because of China aggressiveness, Asian ports such as Korea, Japan, reduced down the price. So, Singapore price looks higher. Singapore doesn't go up, but other ports goes down. We guess Singapore would go down price soon to compete with other ports. By the way, MGO stock level goes up, so the price gap between LSMGO and LSFO got to be narrower. An interesting data provided by MPA Singapore. The data shows the number of vessels arrival in Singapore and bunker volume, compared with last year. Vessels number decreases a lot, but bunker volume doesn't drop much. This means bigger vessels take bunker in Singapore. Actually, cruise liners affects this a lot. More than 90% drop compared with the time before COVID-19. Once they come back, the demand would be huge and get tight.
This is Federico from New York office. In Houston, LS-ECO, LSMGO and HS-ECO all products availability are okay. No more operation trouble. Los Angeles market. Prices also tipped up along the US West Coast on bullish Asian ports. Panama market. We heard that Panama demand reached to around 450,000 metric ton in March. Both products and barges are tight.
About shipping market. China is buying iron ore a lot. The demand from Brazil to China and from Australia to China is very stable until rainy season in Brazil. Middle-sized vessels also got up due to the good demand for grain cargo. VLCC market recovered a bit. We heard Chinese trader Unipec chartered 3 VLCC in one day. And also SPC also booked 1 VLCC from Middle East to Asia. Those activities affects tanker market positively.
Container market. We heard the container freight from Asia to US got up to the record high level. It was affected by the Suez Canal incidents.
Thank you for watching this. If you feel this is worthwhile to subscribe, please do so. And we're more than happy if you did good button. See you next week.